YBTC is the YieldMax Bitcoin covered call ETF. It is a synthetic income ETF designed to give you exposure to the price movements of Bitcoin while generating monthly income through a covered call strategy. But here is the twist: YBTC does not actually hold Bitcoin. It does not hold Bitcoin mining companies or crypto stocks. Instead, it uses options and swaps to synthetically mirror the price action of the ProShares Bitcoin Strategy ETF, also known as BITO. That means it tracks Bitcoin indirectly. Then it sells call options against that synthetic exposure to generate income. In short, you get Bitcoin-like movement plus a monthly dividend. Let us talk about the payout tracker. YBTC pays a dividend every month. As of recent data, the average dividend has ranged from around 60 cents to 90 cents per share per month. That puts the annualized yield between 30% and 50% depending on the share price. This is one of the highest paying Bitcoin-linked ETFs on the market, but the yield is not guaranteed. It is based on how much income the fund can collect from selling options. Some months it might be lower, some months it might be higher. But if volatility remains high in the crypto space, the option premiums will continue to support strong payouts. Now let us look at the income table. If you own 100 shares of YBTC, you could be earning around $70 per month or $840 per year. 500 shares gets you roughly $350 per month or over $4,000 per year. 1,000 shares earns about $700 monthly or over $8,000 annually. These are massive income numbers for a Bitcoin-linked ETF. But remember, you are giving up some upside potential in exchange for that income. Let us talk about share price and performance. YBTC trades around $20 to $22 per share depending on market conditions. When Bitcoin rises, YBTC tends to rise. When Bitcoin falls, YBTC falls. But it does not track Bitcoin directly. It mirrors the performance of BITO, which is itself a futures-based Bitcoin ETF. So there is some tracking difference and some decay from futures roll costs. Add on the fact that YBTC sells calls, and you have even more drag on price during bull markets. That is the trade-off. You earn a high yield, but limit your upside. Now, how does this compare to other YieldMax funds? TSLY tracks Tesla, MSTA tracks MicroStrategy, and VDI tracks NVIDIA. YBTC is one of the most volatile because Bitcoin is one of the most volatile assets. It is also one of the most misunderstood. You are not buying crypto. You are buying a financial instrument that mirrors another ETF that tracks crypto futures. But if your goal is to collect high income based on Bitcoin volatility, this is one of the most direct tools available. Now let us talk fees. The expense ratio is 0.99%. That is $99 per year for every $10,000 you invest. It is not cheap, but it is standard for YieldMax funds. The cost covers daily portfolio management, the synthetic option strategy, and swap contracts. If you are holding this for high yield, most investors see the fee as worth the return. Let us move on to volatility. YBTC is not for the faint of heart. It can move up or down by 5% in a single day. When Bitcoin drops 10%, expect YBTC to drop fast. But the call selling helps soften the blow slightly in bear markets. Still, this is not a conservative income ETF. It is a high-risk, high-income vehicle. Perfect for short-term income traders or people with a strong risk appetite. Risk and sustainability are next. The biggest risk is that Bitcoin crashes or enters a long flat period with low volatility. If Bitcoin drops from 30,000 to 15,000, YBTC could lose half its value. If Bitcoin stops moving, the option premiums shrink and dividends decline. But if Bitcoin stays active, even with small swings, YBTC can maintain strong payouts. It is sustainable in a volatile crypto environment, but very sensitive to major crashes or quiet markets. What about the exit strategy? YBTC is best used in short windows when Bitcoin is volatile, but not in a runaway bull market. In a sideways or choppy crypto environment, YBTC shines because it keeps collecting premium. But if Bitcoin enters a super cycle and runs to $100,000, YBTC will underperform because the calls it sold cap the upside. This ETF is for traders who want to generate income off the volatility of Bitcoin without directly owning the asset. It is best used in Roth IRAs or tax-deferred accounts to avoid taxes on short-term income. Let us wrap it up with my meter rating. Income gets a 10 out of 10. This is one of the highest yielding ETFs available. Risk gets a 9 out of 10. Bitcoin exposure plus synthetic strategy makes this extremely volatile. Sustainability scores a 6 out of 10. It works while crypto stays volatile, but one-sided markets or calm periods hurt performance. Upside potential gets a 4 out of 10. The call selling caps the best part of Bitcoin rallies. Ease of use scores a 6 out of 10. It is easy to buy and hold, but emotionally hard to stomach. My total score is 7 out of 10. YBTC is not for everyone, but if you want monthly income and are comfortable with crypto swings, it gives you a unique way to cash in on Bitcoin without owning it directly. Know the risks, lock in your time frame, and always remember, income is not free. You are trading wild upside for steady cash flow. If you have any videos you would like me to cover, say it in the comments below and I will break it down in plain English.